Ladies and gentlemen, welcome back to Jaymorz Collectibles. How's everyone doing? A bit of a serious video for tonight. So in case you're looking for something else, feel free to skip to the next video. But if you want to learn a hard life lesson on what not to do as a prudent investor, by all means, grab a chair, get your pen and pad, let's take some notes, and learn the do's and do nots. So, in case you've been living under a rock, a notorious tycoon of an investor by the name of Bill Hwang decided to risk the system and over-leverage himself and was margin called sometime last week, which forced his firm, Archegos Capital Management, to liquidate their entire portfolio. Over $20 billion worth of assets flooded the market last Friday and continue to do so throughout the week, causing the underlying assets to violently drop in price. To add salt to the wound, all the prime brokers who lent Bill Hwang 5 to 1, 8 to 1, and some cases even 20 to 1 margin have seen share prices drop considerably. And seeing how they're large financial vehicles or institutions, this shakes the market quite a bit. In fact, there's a lot of scrutiny and investigations going on with how Bill Hwang was able to leverage as much as he could. But we're not going to discuss the politics of it in this video, no. The main takeaways to focus on regarding the situation at hand here are A, he was over leveraged, and B, he was overexposed. Considering how large of a whale he is, having more than a 10% holding in one particular asset or stock in this case is quite substantial. So if things happen unfavorably, you risk so much. You risk the system. You bet the farm and you could potentially lose it all, especially when you're on margin and especially when you're on a 5 to 1 margin. I mean, that's just ludicrous. Remember folks, when the tide reduces, all the ships afloat sink with it, including large cargo ships like the Ever Given. A little too soon? But the man was not apprehensive about taking such large collateral risk. He took the phrase, whatever it takes to win, quite literally. And that, my friend, especially how ironic it is, considering the name is Archegos Capital Management. Well, Archegos in Greek means to lead by example. And what a tremendous example to lead by. Well, that's enough talk about Bill, the investor here. So why am I bringing this up? Well, to my negative 10 subscribers out there, it's to teach you all a lesson that you should never risk the system. You never bet the farm, and you never play high stakes to get ahead. Never ever. I don't care who tells you what to do. Even the most prolific hedge fund manager, take a look at Julian and his protege Bill, who bet the farm and lost it all. So, you never ever, ladies and gentlemen, ever sign that infernal contract, okay? You never ever do so. Because even in the world of collectibles, when you over leverage yourself, that last chess move you make could be your final fortune. Alright. So now that we got that out of the way, let's talk about the second half of this video. So in the peak of the pandemic, we witnessed the largest liquidation of TCG products in existence. I'm talking a mass exodus into the market and prices tanked because they didn't see this thing coming. This ate their asset prices and their entire portfolio. And when you're over leveraged, you're forced to sell to pay for your overhead, aka a lot of these high-end retailers flush their products just to overcome the debt. Just like with Bill Hwang, he didn't see his stock prices drop because he did not obey the 101 principle of any firm out there. Especially considering it's in the title. A hedge. You want to hedge risk, and that's the beauty of collectibles. So if you're going against the system and you risk it all, guess what? It's going to bite you in the... And now we're witnessing the ripple effects with what's happening in the market, both in the collectibles market then and the equities market now. A lot of opportunities emerge and a lot of new investors flock the scene. Call it a redistribution of wealth, if you will. And here we are with the lesson of it all. And that is to not be a hero, but to accrue wealth over the long term. Real wealth is not achieved or recognized overnight. It takes many, many years. And that's the mentality of the prudent investor versus the one who goes ape and risks it all. So it's so crucial to isolate yourself from the turmoil and hysteria and have a level head when entering the market. Remember, the real investor finds out a way to hedge risk versus the one who takes multiple factors of it just to get rich quick. There's a lot of stories of day traders getting rich overnight trading options, forex, futures, etc. However, there's a million times more stories of people who lose their shirts because they risk the system. You never ever take more risk than what you can afford. That's your risk tolerance. And that's why it's so crucial to hedge risk when you can. So with a phenomenon like this, which will ever permanently scar the market, it creates some sort of floor price in the collectibles universe and therefore should be your cost basis at that point in time. So at the peak, or call it a high market if you will, everything has and bears a substantial amount of risk because there's more principal and capital involved in your investment. So just like how Viacom was $100 a share and now it's $48 due to an unforeseen cascade of events with zero transparency. The prime brokerage did not even know what his portfolio contained. If they saw more than 10% holdings, they would have told them, "You're nuts. Not with my money, and get the heck out of here and move over to the next schmuck who would take that type of margin," because they're not taking that risk. But at the end of it all, folks, don't get me wrong, debt is a great financial tool to use to get ahead when used properly. Remember, with great power comes great responsibility, as cliche as that sounds. So to conclude this video and to summarize the lessons we can all learn when investing: A, you never over leverage yourself. Think the Robin Hood glitch, and we all know what happened to that individual. B, you never overexpose to one particular asset class or investment. Just like with everything, you want to diversify so you can hedge the most amount of risk in case one asset class does not perform as well as the other. So you're always going to have a fine balance of a portfolio that you put together because you watch Jaymorz Collectibles. And C, the most important one of all, it is highly unwise to practice shady tactics or use cheat codes to get ahead. An example, when failing to disclose your portfolio position to the prime brokerages who lend you margin, well, it's going to bite you. And just like in the world of collectibles, say you fail to disclose something that you're hyping on the good old MTG Finance Reddit page, you're only doing yourself a disservice because you're emotionally tied to that investment or that thesis that you're pitching. So, it goes full circle. No one's immune, ladies and gentlemen. There is no diplomatic immunity no matter how large you are as an organization. Even the artist of that very card. No one is too big to fail. So I hope this video has shed some light on the do's and don'ts when it comes to investing, and we can all learn by example. Remember, folks, real wealth is established in the long-term position. And to get there, you always want to hedge risk, no matter what. So, with that, I hope you enjoyed the video. Make sure you like, comment, and subscribe. Boy, what a time to be alive. I'll see you in the next Jaymorz Collectibles.